Welcome to Right on the Money, the weekly talk show with interviews you can use to help you maximize your money and optimize your financial future. Before moving forward with any of the ideas discussed on the show, always consult your financial advisor, insurance professional, or tax consultant. Looking for financial help or a second opinion? We can help you in your search. And now, your host of Right on the Money, syndicated financial columnist and money colored commentator, Steve Savant.
In this segment, we're talking about the little-known home purchasing strategy in home equity conversion mortgages with popular platform speaker, author, and adjunct professor at the American College, Don Graves. Don, this section could be the game changer of the entire show because, to me, this is nobody knows it. I didn't know this till I talked to you. This is in the law. It's been around forever. The ability to purchase a home almost at half its value for seniors. This could be, I have to say, just a little as an anecdotal story, I'm in a seminar, I'm talking, and a couple had already written off, they're not going to be able to get the house of their dreams. They've looked at their numbers, their finances. I got up and I just shared the basic thinking behind what you're going to explain here in a moment. And the tears just started running down her eyes because she saw that she's going to be able to go into the house of their dreams. This is what I like about this segment. This is a dream maker segment. So tell me, I'm serious. This is a mind-blowing piece of the Heckam law, government supplied for seniors, and hardly anybody's taking advantage of this.
Well, hold on to your seat because it is a game changer. Let me tell you about a lady in Philadelphia. Her name, I won't give her name, but she lived in a part of Philadelphia that home values had just plummeted. And she was 80 years of age, a little less than that, and she was going to be able to get just around $80,000 for her home. And she was beside herself. She says, I want to move back near Aunt Rose in South Philadelphia. Now, Aunt Rose's neighborhood was $200,000. So her realtor called me and said, Don, I heard you can help with this. I said, what's the home she wants to buy? He said, $200,000. How much money are you going to have in proceeds after you sell her house? He said, 80. I said, not a problem. I said, what I want you to do, go down there, find 5 houses near Aunt Rose, bring them and meet me at the house. He says, Don, I said, just do it. And I sit with the client. I said, which one of these do you like? She says, that one right there. I said, let's do it. I said, let's put an offer on that right away. And he just blows up. Don, what are you talking about? I said, I'm talking about the Heckam for Purchase, authorized by both houses of Congress, signed by the president in 2009, that's going to allow this lady to purchase the home near Aunt Rose for around half down and have no monthly mortgage payment. And so what happened? She purchased the home for $202,000. She had to bring around $73,000. She was a little older, and she had $7,000 left over. She moved in and couldn't believe it.
Well, let me stop you there. Was she pre-qualified before she went house hunting?
The qualification was she was old and she had money for a down payment. See, the Heckam for Purchase, most of us, when we go purchase a home, my wife and I want to buy a $400,000 home. We go to the bank qualifies and said, you're eligible for $200,000.
But before she went shopping for a home, she got qualified. Is that what you're saying?
Her qualification was that she was a senior. She had paid her taxes and insurance on time.
That's it?
And that was it.
That was the requirement.
That was the requirement.
I'm sorry, I'm stunned by that. That is really simple and straightforward.
It's a game changer.
It is.
It's a game changer. So those who are listening, you know how you buy a house. You go, the bank loans you money, and if the house is $400,000 and the bank loans you $200,000, then you bring a down payment of the rest of it. Typically, when you sold your other house. Now, in the Heckam for Purchase, here's a lady, husband and wife, they're here in Arizona, they're coming from church on Sunday, and they see that sign over there, new construction from the low 400s. And the wife gets a little tear in her eye, and he says, honey, I know, I'd love to move in there too, but we just can't do it. The best we'll get for our house is $300,000, and I don't want to pull it from savings, and I don't want to take out a mortgage. And she says, I know, we just can't do it. Now, what they don't know is that $400,000 house can be purchased for around 50% down, and they'll have no monthly mortgage payment. Now, the sign should say $200,000 down, no monthly mortgage payment. Call us today. And then the wife would smile and say, honey, did you see that? Do you think that could be for us? Steve, it absolutely is.
I just think you just framed a national strategic campaign for advertisement.
Well, call Don Graves if it works for you.
Okay, so just to redux here now. All right, so I'm a baby boomer. I'm in my 60s. I'm ready to start looking for the house that we're going to settle our life in. I told my wife, here's what I have down. And now I understand. I just want to make sure I get this right.
Sure.
The 2016 claim top value is, I think, $625,500. Is that correct? Did I get that right?
That's the most I'll value your home at. So you can buy an $800,000 home. I can only use $625,000.
Okay, so let's say I don't want to go above the line for our discussion's sake. So I see the house of my dreams. I go with my wife. We're looking at homes between $650,000 and $675,000, right? Because we'll see if we can talk them down to the heck of number. It's to get to our $625,000. I'm coming. I went this before we did the show. I went online and said, Steve, you young rascal, you need to put down about $308,000.
Sure.
Okay, I said, my gosh, that's great. My house is worth more than that, the one I'm living in now.
That's right.
So I'm going to go ahead and put that down. I have a mortgage, but I don't have a mortgage payment.
That is correct.
Okay. And as long as I'm going to stay there, and do you concur with many of the advisors who say, if you're going to do this, it's a great idea, but you need to really settle in your mind, this is the house you're going to stay in for the rest of your life?
I believe that's a good way to approach this.
There could be an extra strategy if you absolutely had to, and it could work for you, but mostly we're trying to look at people who are going to stay here.
Sure. Listen, your kids have left the house. You don't want to shovel snow. You want newer appliances, and you don't want to rake leaves, and you like to be somewhere nice. Now, here's what's exciting. The place you looked at, you drove by, it was $500,000, but that's the base model. And that's the one that doesn't have the granite countertops and the finished attic and loft. And you say, well, how much for all of that? And they say, well, that's $600,000. And you say, oh, I can't afford it. But if they said, what if we could do that for you, Steve, and your wife, and all it took you was $300,000 down, and you get this model here, and you have no monthly mortgage payment. See, what happens is now you've created what we call right-sized retirement. Not downsized, not upsized, not just right-sized. It's the Goldilocks. This one fits just right, and it's a game changer. So if you had $400,000 when you sold your house, and you put $300,000 down, you've got $100,000 left over. You see, you can move to the home that's the right size for you and supersize your retirement. Because it's no good to have this nice house and you're always looking at the dial waiting for when the money's going to run out. You want to be able to do this and say, oh, honey, we've got money not just to last for longevity, but to enjoy the lifestyle we want.
In fact, I have to say, the first time I heard Don talk about this, I had a senior come to me and say, Steve, we found a home out in Fountain Hills, Arizona. We're broadcasting from Arizona. And he said, Steve, I went in there and I completely geriatric sized the house. I said, what does that mean? He goes, I already put in the tub you walk into. I've already put in all the rails, this thing. I'm going to set this up, so I'm staying here because I'm not going to a nursing home. I'm going to do this right. So you talked about adding all those accoutrements. I'm talking about, hey, some people are even planning for their own geriatric lifestyle and elder care later on in their life.
Sure.
This is a huge opportunity. I can't say how excited I am about this because this is the area, by the way, I chose this one myself. This is where I'm going. This is down the site, purchase the home. I went back and told my wife. She thought I was talking to a snake oil salesman. So I just want to encourage us. This is a huge opportunity. And I recommend, this is just Steve's recommend, I highly recommend that you investigate this, talk to a certified loan applicant person, a person that really understands the HECM law, understands this code, and sit down with your advisor so that you can plan and strategy. This could change your timeline on your retirement in such a way that you could sit there and say, man, I love your line here. It's right-sized. We are happy. And, you know, I've heard Tommy Hegna always talk about the happy factor in retirement. This has to be a big chunk of it.
Yeah, I would think so. I'm not yet of age, but I told my wife, I can't wait to get a reverse mortgage. I can't wait to use the HECM for purchase. And in an earlier segment, I don't think we did it here, but I just had a client. They had $535,000 already saved. And they sold their house, paid off their existing mortgage payment. So that meant they had more money in cash flow, but they had $400,000 left over. They purchased a $300,000 home, and they used the HECM for purchase. So they only had to bring $150,000 down. They had $400 left over, minus $150. They had $250,000, $253. They added that back to their retirement. Steve, you want to talk about a happy couple and a long retirement? There you had it.
Well, remember, if you're listening to our show on radio, iTunes, or podcast, you can view our video version right online at rightonthemoneyshow.com and request information right from this segment. In our fourth segment, we're going to be talking about the home equity strategy and home equity conversion with Don Graves. We'll be right back after the break.
For more information on this week's money topics, just go to our website at www.rightonthemoneyshow.com and follow Steve's daily postings on Facebook, Twitter, and LinkedIn. When it comes to retirement, money management, small business, insurance coverage, college funding, or budgeting, we have the interviews you can use.